Hello and welcome to the show today. So many awesome things that we're going to dive into today, including how to properly manage cash flow in your business, how you can kind of create your own personal banking system to kind of operate like the banks run, what you need to know, and probably the most important financial lessons, business wise and personal wise. And this all really comes down to just helping you increase your overall personal and business wealth. So how do we do that? Well, that's exactly what we're going to talk about with us today. And with us is Curtis May. Now, Curtis May is a creator and owner of Practical Wealth Advisors and host of the Practical Wealth Show podcast. Now, the primary focus of his financial planning firm is to help individuals and family become financially free by following the principles of wealth creation and have endured for centuries around the world. Now, as the host of his most popular podcast, the Practical Wealth Show, and his individual meetings with clients, Curtis teaches people that their number one financial asset is their knowledge. The more they know, the lower the risk and the greater their chances of success over time. Now, he feels strongly that financial products are simple tools, and what makes the biggest difference in people's lives isn't the product, it's how they actually use it. Now, Curtis has been planning for individuals for more than 35 years, and he's passionate about helping his clients save money and live their very best life they can right now. Now, Curtis is very blessed to be married to his wife of 22 years, Erica, a family law attorney. They live they like each other so much that they even share an office together. I don't know how that works. I'll have to dive in and ask him how he makes that work. Curtis, and still stays married. Curtis and Erica have 3 amazing daughters and love to travel. Curtis, welcome to the show today.
Thanks for having me. Long time. Yeah,
man.
Thanks for having me on.
You've been up to a lot of cool things. And one of the things that I think I love the most, especially being an entrepreneur, because this is something really powerful for businesses, is this cash flow mapping that you've actually just come recently out with. So if you don't mind, let's start there. Let's jump in. Talk to me a little bit about cash flow mapping, what it is, how it works.
Yeah. So here's what I found in working with people is that the rubber meets the road at cash flow management, right? And so I was just saying wealth begins in the mind and ends in your bank account. But what most people are taught to do is I'll call it bank balance accounting. They just look at their bank and here's what I could do. And one of the things that our cash flow map we show them how to separate different accounts. And so we have a tagline saying, tell your money where to go instead of asking where it went. And so for most people, either on the family side, and we have 2 maps. So we'll combine. So we have a map for business owners and, looking at your P&L and, helping people organize. You have are you paying yourself first? We call that a wealth capture account. Do you have money set aside for taxes, operations? It's similar to, I would say it's like, but I have my own software, Profit First. So if y'all read that, I still have my clients read that. I just have a different way because I integrate it into our planning model. But what you want to do is most people, when they're dealing with their money, they're looking at history. So like budgeting, we don't like budgeting because what happens is it's like driving a car looking through the rear view mirror, right? You're looking at history. And what I want people to do is forecast. Like you have, there's certain static things that are fixed. Your bills are fixed, personal and business. You've got variable stuff, that fluctuates up and down, and then you should pay yourself first. So what we do is we say, all right, look, let's look at that. What does that look like? And let's allocate money for that. And that way you kind of have peace of mind. Here's what, like for business owners, they don't do it in their personal. They won't, I don't pay myself a salary. I'm just bootstrapping. I can't stand that. The business is there to serve you, right? And so you need to figure out what your life costs and make sure, because if your business can't support you, right, that's your business talking to you and you have a sales problem, right? You got other stuff going on. And so you really, financial literacy, Ty, is accounting, right? The numbers tell a story. And what I find is most people don't deal with the story and they want to talk about investing and, typical financial advices around, you need this fund, you need this and that. But really, what they find it tedious, but I love it. I really like helping people get into and be aware of the money that's in their life, because if you want to create maximum wealth, you have to create maximum efficiency first, right? So most wealth is really 6 areas to do that. And I'll take a breath. One is how you manage cash flow or don't manage cash flow. It's really the question. And then we look at, we teach our clients to look at transfers, wealth transfers. A transferred money is money you're losing unknowingly and unnecessarily. So let's say there's 15 or 20, but I'm gonna take the top 5. How you pay mortgages, okay, taxes, how you fund qualified plans, 401ks, SEPs, 403bs, IRAs, that kind of stuff. How you pay for like college expenses or train to pay for these things, and how you pay for major capital purchases, business equipment, cars. Any major capital purchase we define as anything you can't pay for in full within your monthly cash flow. So there's more money lost in those 6 things I just managed than you'll ever make trying to pick winning investments. So I try to help people minimize their losses. I don't focus on helping them pick the winners, because if I have some revenue, let's keep more of what you make. And so in my mind, that starts with managing your money. So we actually get into the nitty gritty of where's the money going? Are you overspending? What are you using these subscriptions that you're paying for? I mean, you really have to get in there and really looking at it every month, right? And worst case every month. I do my P&L every week. I need to see what's going on. And so I teach people to kind of pay attention to that stuff, because the numbers tell a story, and most people have no idea what the story their numbers are telling them. That's how we do.
When we start in these 6 principles and we dive into cash flow, what are the biggest mistakes that you see entrepreneurs make? Is it that they don't have this profit first mentality? Because I see a lot of entrepreneurs, guilty as charged, come in and say, I don't have any money because I'm reinvesting everything I make. It's all what we all say, it seems.
Yeah. Yeah.
But the reality is that then when you switch to a profit first mentality, for those people that don't know what profit first is, you should look into it, because it's one of the guiding principles you have in your business. Mm-hmm. And then you shift to that, something happens, it triggers it, and you're like, I don't like running broke. And then you start setting money aside. But what is it? What's the problem?
Well, so here is the problem is, so you got to make a decision of how much of your money you get to keep, right? And so like, if you go back to, I'll talk about principle-based planning, but like one of my foundational favorite books is The Richest Man in Babylon, right? Part of all you earn is yours to keep. So that means out of your revenue, you've got to say, all right, we teach 15%, but let's say 10, 15%. But what you have to do is, here's the thing. So this old timer, my family was in the bar business, right? And this guy used to tell me when my father passed away, he came in and was kind of like mentoring me. He said, listen, we had 2 shifts. So it was a cash business. Said, listen, you look at shift 1 and shift 2, you take $50 out of each drawer and you put in an envelope and you stick it in the back of the safe, and you deal with what, that's your money. And so he would, he was making like $10,000, $12,000 a week. So he was putting away serious money. Then he wouldn't even look. He would just forget about it, because what happens is your business will eat up all the money you'll give it. If you don't decide that, all right, I gotta, and that's the thing, it'll just eat up everything. You'll say, you always have, I need new equipment. I got this business debt. I've got, you'll just spend it. So you have what I do, I found was once I created that and moved it in my mind, it was going. So the only thing I focus on my operations account. So I could have 10 grand in my wealth capture. I have money in the tax account that's available, because that's for me to, pay EchoSam and our quarterly and state stuff. And so now you really have a clear vision of, can I afford to hire somebody? And so you really have to analyze that, because, and that's the thing, we just don't do it. A lot of people come go into business from corporate, and you come into business with bad money management habits, not doing your budget, not doing your cash flow anyway. So now all of a sudden you might be good at the business, but now it's 10 times worse, right? Because I have people that I had this daycare owner. They really were making like $1.2 million. They no separate accounts. They were commingling everything. They didn't pay themselves. They were robbing Peter to pay Paul. 3 daycares, and didn't have 2 nickels rubbed together, because they didn't stop it. They, bad credit, the whole thing, because they're just, even when you get good credit, it starts with being a good money manager, being a good steward of your money. Does that help?
Yeah, it's perfect. And That speaks to what I talk about a lot, which is Parkinson's law, which is the demand will always increase to match the
Yes.
supply.
Yes.
And I use that, all the time because it's
Expenses rise to meet income. So if you make more, you're going to spend more.
Yeah, it's the way I always say. You think you're going to have 2,000 extra a month, and then all of a sudden 2,000 extra stuff for these.
Right. Because nature doesn't like a vacuum, right? It's gone. You're going to spend it.
So much true, especially business. So then, what do you do with the wealth transfer part of that? I mean, let's say you've done the right thing. We've got the cash flow set aside. We've got a separate tax account. We've got a separate profit account. Now we're accumulating money. And then what do you do with it? Because I think a lot of business owners like to have it liquid, even though savings accounts make us no money, because we're freaked out. Like if the economy changes, this happens, we want to have it there. So how do you advise of what you keep just in case anything, stuff hits the fan? And then what do you do with the rest of it? How do you start putting it?
So here's what I call the path, right? The first path is mapping and managing your cash flow, telling your money where to go. Then I teach principles-based planning. So I'll run through them real quick and I'll answer that question. So the first, because most people think it's about investing and what do you do? It's not, okay? So the first principle is you got to save 15% of your gross income. So you got to have what I call principles or money rules. So when money hits your business or personal economy, you've already got a philosophy of how you're going to deal with it. The second level that most business owners, investors miss is protection, what I call. So that's looking at, insurances, auto, liability, trust, wills, asset protection strategies. That's principle 2. Principle 3 is legacy. Principle 4 is liquidity. Okay. And principle 5 is velocity. So so your answer to the question is in the liquidity, because people are like, oh, I got to have this money invested. I got to, and that's not, no, I teach you need 6 to 12 months of liquidity. Okay. Between personal and business. So your first 90 days, depending on the business, is like your emergency fund, and everything above that is your opportunity fund. Because I don't want you to just focus on emergencies, but if you have money, see, people need to capitalize, right? Just from a principle standpoint, then I'll go into what you do with it. If you have money, opportunities will find you, right? I spoke recently at the Laundromat Millionaire Conference, and I have people that they're saving and then they're buying, older operators, the things not running right, and they're, buying them for $100,000, $300,000. And so opportunities to buy up your competitors, that kind of stuff, they kind of need both. They need to save and they need to get with you so they have access to other people's money, which is faster, right? And then what I do is personally, and what we teach is once you have the wealth coordination account, we actually teach a strategy called the private reserve strategy, or you may know it as infinite banking. And then we show people what I do with my profit money is I transfer it to my properly structured dividend paying whole life policy, structured to hold money, because what people do is they save. And then what people don't get, the fundamental concept is you finance everything you buy, right? So you either use other people's money, but what people don't realize, if you save and then liquidate to go buy this thing, even if it's for an investment, you don't have the money anymore, and you got to build the money back up. And see, what they don't teach in personal finance is the concept of opportunity cost, right? You finance everything you buy. So when I transferred into my private reserve, what I can do is I can collateralize my money, use the insurance company's money, but my money is still making money and I get to use it somewhere else. And so with that, so when we do that with major capital purchases, what that does is it keeps your money flowing, because compound interest, people talk about the miracle of compound interest, but compound interest works best over time, uninterrupted, right? So you've got to put it somewhere, because if you keep putting it in, it's not making money in any type of cash account anyway, right? So, but if you keep, if you keep taking it out, you never, and I showed this one at a conference a few weeks ago, and they were blown away by how much money, every time you build up money and pull it out, how much that's costing you over time in terms of real money that you don't have because you broke up compounding. And so a lot of times people are good at their thing, but you got to learn how money works, because it's not what you earn, is what you keep, right? And so we teach that. And then I really focus, most people aren't liquid enough. So if you don't have that, I don't want you to do anything else. The only thing I want people to invest in is their business, right? Your number one asset is you, right? And you need to invest in your mindset, your skill set, your network. And in my mind, your number one investment is your business. right? Because see, the problem with if your business owner listening to this, you can't listen to typical advice because it's designed for employees, okay? Because all of the advice is about sending your money to somebody else's business, some mutual fund, some fund manager where you have no control. You're putting up 100% of the money, taking 100% of the risk to maybe make 30% of the profits if there's any profits at all. Now, it's not me. Curtis has no original thoughts. I'm paraphrasing from Jack Bogle, right? The founder of Vanguard, from his book. And so what I want you to do is invest in your marketing, invest in, let's say, with Tata's, you don't have good business credit. See, to me, doing that is an investment because you can access other people's money, because in today's economy, money is debt, right? And so you want to be able to use there's constructive debt, destructive debt, right? So you want to be able to use constructive debt to buy a real thing, right? A house, a business, equipment that generates revenue for you. And then the revenue is paying back the debt, right? And so so those things to me are better than sending money to some fund manager you ain't never met, hoping the market does well. I view that as very risky. That's why I'm the theme of our show is kind of wealth outside of Wall Street. What can you do, right? Because there's 4 asset classes: business, real estate, paper, and commodities. So you've got to that's diversification, right? It's not like, some 100 mutual funds in an S&P account or a bunch of different stocks. That's just really shuffling the deck chairs on the Titanic. And, so you kind of got to look. I'm a bit of a contrarian because most people don't look at the world that way, but I'm a 3rd generation business owner. So, most people I talk to, most of their money is in their businesses. They buy real estate, and their emphasis is it should be on cash flow, rather than accumulating, this big pile of money you can live off. You can't eat equity. What I want people to do is become financially free, which is passive income greater than expenses. And so once you create that as an objective, then that tells you what products to buy, is not, so the products come last. Once you figure out principles drive strategy. So the banking concept I described as a strategy. That's step 2, right? Principle 1, save. Right? The other 5, that's where the money you have for the strategy. And then the tactic are products that you buy. So the framework for how I approach this with people is principles drive strategy, strategy drive tactics. And then the first thing we do is get people in control of their cash flow so that we have a really honest picture of what's going on. I feel like
it makes perfect sense. Yeah. And there's a lot of nuggets in there, too many to even, decode in like 10 podcasts, because there's so much great insight that you gave. But one of the interesting thing you keep coming back to is debt. And I'm interested in your perspective there, because like one of my really good friends retired, 38 years old. She's retired. She owns an Airbnb empire, and man, she has no debt. Like every property Airbnb is paid free and clear. Mortgage, house is owned free and clear. Have money to our house. Buys a car free and clear. I'm the exact opposite. I got to leverage debt to help, because if I could borrow money on my house at 3%, I'm being a moron if I can't make double, if not triple that return on just about anything I can think of the opportunities I have. So to me, that's the way I look at it. Like if I could borrow money at 3% and then write it all off and get that back on my taxes, and then be able to leverage that and make 8 or 9 or 10%, it's kind of similar to whole life. Then it's like, why would I not do that? What is your perspective there? Is it good to leverage debt if you think you can get a significantly greater?
Yeah, I mean, debt is a 2-edged sword. So you have to be a good money manager. You got to manage cash flow. You said it. It's like, because 3% is basically free with the, you know what I mean? And so if you can't make more than that, then you should pay your house off, right? I mean, because if you got to think from a macroeconomic, and so you have to get on the side of inflation. So if they're printing money, so the currency that you see buys less and less every year, right? And then you're storing money, and you're trying to get $1 million in your 401k, but that $1 million with inflation might buy $600,000 worth of stuff, taxable, right? When you start taking it out. And so if you leverage that, good debt meaning don't buy stuff that you have to pay for, you've got to buy things that flow, that cash flow for you. So you buy a business, right? You buy real estate, you buy apartment buildings, if it's in your business equipment, because the main thing I teach when I talk about saving, I just want you to have the liquidity. So if stuff goes sideways, you have the capital to deal with it. You could, because to me, if you have $100,000 cash and $100,000 mortgage, let's say on a mortgage, right? You got $100,000 mortgage balance. You got your house is worth 200,000. You got $100,000 balance of your mortgage, and you're not in debt. You have a liability, but a debt is when you have more liabilities than you do assets. So in my mind, and this is how corporations look at it, that is a balance sheet neutral decision. So you could argue if you stroked a check, you could stroke a check to pay the house off, but now you're poorer, right? Because you gotta ask permission to get the money back out, right? Equity has a zero rate of return in the property. So when people, that's painful for me, because equity, because it's or if you're paying down extra on your mortgage, you're strengthening the bank's position because your house is collateral, right? People they're looking at, because they've been trained, because when you look in personal finance, the two schools of thought are the accumulation theory, right? Buy and hold, dollar cost average, get out of debt, buy term investor difference. And if you took a corporate finance course, they teach velocity of money, right? Flow, leverage. They buy permanent insurance, right? But the corporate finance strategy works in personal finance. And what happens is everything that we've been trained to do makes the other side money. So when you're paying extra on your debt, you're creating velocity cash flow for the bank, because they're not putting it in your savings account. They're loaning it right back out to somebody else, right? So you want to get in their game. Inflation drives up rents. It drives up asset prices, stock prices, real estate prices. So you want to, and it also diminishes the cost of the debt that you're paying for. So you might as well let the Fed destroy the debt for you, and you go lever up and go buy cash flowing stuff. So you have to kind of see both sides of the game, because everything that's your liability is the bank's asset, right? And so if you say, well, I'm going to double down the debt, you're going paying off your liability, but you're just putting more money in the financial institution's asset column. So we've got to learn the game. You're good at the game of your business, but you've got to learn the overall financial game. And that's the kind of the message of I consider myself Ty, a financial educator, right? I believe what you know today will determine where you'll be at, 5 to 10 years from now. And it's hard to win a game you don't know the rules. And I think a lot of times we're playing either by the wrong rules, the rules that benefit everybody but us, or we don't know the rules at all. And that's a shame. That's detrimental to your financial health.
One of the things you mentioned early on was about college, and I'm interested in that. My kids are 10 and 13. My daughter's about to ready to turn 11 this week, actually. So, in Florida, I love Florida because Florida's got this thing called Florida prepaid college. You could start like from the minute like your kids are born, and it's like stupid amount of cheap per month to put the money aside. And when you do that, you lock in the current rate, right? So my kids are born, I start paying, I lock in whatever the college is at that point, and that's all I'm going to pay, right? So in 15 years, it's way more money to go to school. And I've locked in what it was 15 years before. But there's all these different, suggestions and opinions of how you properly save Florida. A lot of, for college, a lot of places don't have what Florida has. What's your suggestion there? What's the best way for somebody to really start properly planning for the kids to go to school?
Yeah. So I don't like putting money in silos. What I mean, one use products, right? So first of all, the products in of themselves, there's no financial success built into any product. So if you're somebody's leading, I got this great product, there's no product built that's going to take you to glory, right? So it's principle, strategy, then product, right? But that being said, one of the things that I talked about the private reserve or using the permanent insurance. I actually store my liquidity in that, okay? Because what happens is, think about this. So before college, even at their age, what are there things that you're going to do with them that cost money? Are there private schools? We've paid $2,500 for summer camps for my 10-year-old, flew her to Lake Michigan, right? Drove her to Lake Michigan, flew her home. We didn't feel like going back. And Sweet 16 parties,
Yeah. Mine
tuition.
are like financial vacuum cleaners. They just
Yeah,
suck money
yeah.
in. Like
So what I do, if I have policies on my kids, and then when my youngest went to Europe as a sophomore in high school, just a public school, like $4,000. All right, well, I'm going to borrow against her. I own the policy, but I've already kind of got that stored. And then to your freshman year, she went to Italy. So I only had to come up with, fortunately, 1,000, or I think 1,000 for that. And then she needed 1,000 of spending money. Well, guess what? I already have that liquidity. I just leveraged the cash values of my accounts. Here's the other thing. And it's invisible to FAFSA for the most part, right? So when you put money in the 529 plans, let's say, they're all in mutual funds. So what happens if the fund is down the year you need it? Right. And so I like certainty. I like liquidity, use control of my capital, and I like certainty. Right. So what happens is utilization is velocity. So a lot of people are trained to leave money sit. Right. So if I take a loan and I borrow $1,000, I pay everything I pay back to myself at 10%. So I just drive more capital. It's more of it's a cash flow management tool, but I always treat my money as if it has a cost. But there's a lot of uses, tuition, for private schools, that if you have that liquidity, you can begin to negotiate stuff. Let's say the tuition is $7 grand. Say, well, if I gave you 5,900 up front, could we work something out? Then I would take a loan, pay that, but I would pay the full year back to myself, so that I would capture that basically buy money at a discount. But see, you have to have liquidity to do that, because if you've capitalized yourself, opportunities will find you, opportunities for discounts, opportunities to buy your competitors. And so same thing with college, because what happens is I use it for them, but it doesn't hurt me maxing out on qualifying for whatever aid that they do. So I like the utilization, because there's so many stuff we've done between 1 and 18 that they need money for. I don't want to sock it away. Now, I think that program is great. I'm not saying not doing that kind of stuff, but I liked liquidity because there's major capital purchases that we do with them that I could kind of use it, pay it back, use it, and just recycle the same money over and over again, therefore creating more efficiency. So that's what I do. That's what we teach. Does that help?
I love that. Real quick, the private banking, give us an overview of that. A lot of people still are unfamiliar with how to use whole life the way that you're describing.
Right. So that's you're going to email me. I will send you I have a little video on it, but because Nelson Nash, it's a book. So start with the source. The source is a book called Becoming Your Own Banker by R. Nelson Nash. It's great. It's on Audible right now. All right. And so here's what it is. It's a system of money management. Okay. And so we're already banking. So banking, I don't mean chartering a bank, and banking is storage, right? Where do you store your cash? Where do you is the question I always ask people. And so banking is creating a pool of capital that you control to move at cost to meet some need you have. So it's a saving strategy. Okay. So now what happens is that's the strategy. The tactic is, I'm gonna say a few very specific things. Okay. Properly structured. So that means structured we're solving for minimum insurance, maximum cash accumulation up to the IRS limits. Okay. Properly structured, dividend paying, whole life. I only use whole life for banking because I like certainty, because everything in a whole life policy is guaranteed. So there's other products and there's other people that, you can do it. It works better with this. Though in my mind, they're charlatans. I'm going to say it, right? Because that's BS. Is that you're not, as a practitioner, we're trained. We don't do that. Okay. Because you could make it work, but they're unstable. And dividend paying whole life with a mutual company, because they are really good money managers, and whereas mutual, we're part owners. And so do we get dividends? We use the dividends to buy more coverage. So now we have that as a place to store our liquidity. So what you have is, no, it's not a magic money box. So people say, well, how much, if I get $1 million worth of insurance, how much can I borrow? That's not how it works. Okay. That's the question, is not how much does it cost? The question is, how much do you want to save? So if you make a 100 grand a year, the question is, can you save $10,000 or $15,000 a year? So now we will structure a policy for 10 grand. that will, where most of it will go to the savings, and you're enabled to leverage the savings. So let's say out of that 10, you might get, I hate to show a number, like half of it in cash value year one. That is totally not how a regular whole life policy works. So if you're hearing this, oh, let me talk to my insurance agent about this. And most of them don't know what you're talking about. If somebody's saying they do it and they don't literally beat you over the head with Nelson's book, they don't do it, because people that do it, this is all we do. Okay. And it's, we're like, very like zealous about it, because but it's just, it takes discipline. It's an add-on to the money management system. So when I teach cash flow mapping, you got to have the discipline to manage your money, because if you can't do that, you can't do the banking part, because you don't have any money to do it, and you'll probably screw it up. So that's why I do it in stages, right? Because as great as it is, you can still mess it up. But the whole idea is storing capital. And then when you have the opportunity to use it, you can use it for two reasons. These are two reasons that we teach people to do it: for major capital purchases, so that because you finance everything you buy. So if you had a pool of capital and you own your own banking system, quote unquote, if you own your own bank, would you bank at Wells Fargo? No. So if you own your bank, you should be your best customer. And we start to pick off small things. You're paying for your auto insurance annually. You could buy a car. You could, you start to redirect, because the whole goal is the interest that you're paying. In Nelson's book, 35 cents of every dollar leaves their personal economy in the form of debt to others. So your first goal is to get that money flowing back to you. Okay. It's not a get rich quick thing. It's not about arbitrage. It's not about rates of return. It's about efficiency. Everybody's chasing rates of return, but 30% of your money is leaving your house, your personal economy and taxes, 35% to debt. And you're trying to struggle to save 5 or 10%. And I'm being generous. So what if you could lower your taxes? What if you could lower your non-preferred debt and redirect those debt payments back to you? You're halfway in the winner circle, and you haven't even, I didn't say you couldn't go to Starbucks and, all that stuff, right? I just want you to become more efficient, and I want you to live the best life you can today. I want you to go on vacation 3 times a year. I want to do all that kind of stuff. And most of the times you're just inefficient. You don't even have to cut back. You can't win, Scrooging your way, like, scripting your way to financial freedom, and trying to live on less and eat beans, and I'm not going to spend, and I'm not going to go to Starbucks. You can't win that way, right? Because you have a mindset of what I call fear-based hoarding, and you have a scarcity mentality, whereas you want to live within your means, but your focus needs to be on expanding your means, right? That's a more of a positive focus of how can I make more? How do you make more money? You got to create more value in the marketplace. So money follows. So if you're not making enough money, you're not solving enough problems in the marketplace, because money is the result. And so that's one of the things that, what is is the thing from Atlas Shrugged. You said money is the root of all evil, but what's the root of money? Okay. Right.
Right.
And from the wedding speech, right? And so you have to, if you're not making money, that means you're not solving problems, you're not serving people. And how can you do, especially as business owners, do that better? And the result of providing good service is profitability, right? And then all I want you to do is to be a good steward of your resources when they hit your accounts, right? And that's really the thing. So what are your principles? Then there's strategy, and then there's taxes to help you do that. So that's kind of the framework and what I teach that.
I would love to spend time hanging out more. And, as we come to the end, where can everybody go to be able to talk to you and be able to learn more?
Well, I would like to, so if you want to hear more of the madness that is Curtis, go to the Listen to the Practical Wealth Show. And, our theme is kind of wealth outside of Wall Street. And I try to show, like, successfully is clues. So what are things that you can do to make money? And we talk about, how money works. You can go to our website, which is practicalwealthadvisors.com. And, I have a little video on there, but you could click apply to work with Curtis. And you could, if you want to, if I've said something, who's this crazy guy? You can always schedule a 15, 20-minute strategy session. We can talk about it. And I can, if I have your email, I'll send you. I will over educate. I err on more information than less. So you will have homework and stuff to do. And then I have a little landing page where I have a little exercise called it's a little ebook called Budgeting Stinks. And we're talking about more of the cash flow mapping, and then I'll follow up and send you a strategy session about if you want like a cash flow map for your business or personal. And so if you'll text BFC to 33777, we'll send you a link to download the ebook, and then we'll follow up, and you can have a conversation with us. If you do that, I know that you want to talk about cash flow mapping. And then the other one, we can talk about everything, which will include that, but this is specifically to get you some information on that.
Awesome.
How's
Curtis,
that?
thanks for joining us today.
My pleasure.
So listen, if you're watching this, a lot of good stuff we talked about. And as you see, we just scratched the surface. I mean, Curtis and multiple of these looked at kind of different principles, 5 or 6 or 7 of these different cylinders, these different verticals we couldn't even get into. But as you can see, there's a lot to be said with how you manage cash flow. And then that starts by helping you put money aside and how you invest that money to kind of become your own banker, and just how to, use your money to be able to multiply your money. So many things that we've yet to even be able to jump into. So remember, knowledge doesn't mean anything unless you're actually taking action on it, right? It's the action of the knowledge that you have that really will propel you forward. So the actions to take is, first of all, go to practicalwealthadvisors.com. Ton of great information here. Practicalwealthadvisors.com. You should look more into cash flow mapping. It's where everything starts. And you can easily do that by texting BFC to 33777. That's BFC to 33777. Make sure you check out the Practical Wealth Show. It's on a lot of different platforms, including Apple or including iTunes.
33. I only heard 13. 33777.
Yeah, 33777. Correct. So 2 3s and 3 7s. 33777.
Right.
And I'm also going to put a link to Curtis's LinkedIn on here, and I'm also going to put a link to the bank where we actually talk about becoming your own bank on the show resources page as well. But most importantly, visit practicalwealthadvisors.com, text BFC to 33777, and get started on the road to be able to be your own bank and also really creating significant wealth for you and for your business. So thanks for tuning in, everybody. Appreciate it. Have a great day.